Hello, everybody. Green Effect Podcast, Season 6, Episode 10. No play on numbers this time. It's not 6769, just 610. That's it. Here we are. So, we have a lot to unpack this episode. I start to use that term unpack a little bit more. I think I first heard it a couple of years ago watching my wife and I watch these kind of smut reality shows. Someone used the term unpack, and that's all we say. Anyway, lots to unpack this time around. We had a Bank of Canada meeting. We still have crazy stuff happening in the Middle East that is messing stuff up. We had, on top of the Bank of Canada announcement, or the Bank of Canada meeting, on a quarterly basis, I believe it's quarterly, they come out with a monetary report that just breaks down a whole bunch of data. And so we're going to talk a little bit about that throughout the episode. So I want to start off with one really important thing. And as you probably know, I deal with a lot of first-time home buyers, second-time home buyers, and mortgage brokers have to make sure they're going through this with their clients. And listen, life is expensive. Life is stupid expensive. We own a home, we have rental properties, and I think when people are buying homes, I think more so now because there's so much fragility. There's a word for you, fragility in the market. There's a lot of fragile stuff going on. People have to be prepared for expenses that come up. I see some of my first time home buyers and I warn them a little bit saying, hey, based on the down payment, based on your closing costs, based on your savings, I know you're scraping together your down payment to make it all work. Just be aware there are a lot of expenses and they ain't cheap. So when you're buying your first home, be aware of that. Even your second home, because I think a lot of second time home buyers, they're coming out of that market where appreciation was really super strong. So just be aware of that. If you're a real estate investor, also be aware it's not just rainbows and lollipops when it comes to rental income and cash flow. Yes, your property has to cash flow. However, be prepared. There are expenses. Like I said, my wife and I, we have rental properties. Every year, we seem to have one massive renovation that's required, or not even renovation, repair. This year, we have a property with some water backup. We have to have a pipe replaced and some mold cleaned up. Like, that's going to get done. I think last year was an issue with a roof. Like, just stuff comes up. So when you are involved with real estate of any type, be prepared. There are going to be expenses. And now that we are in a market where the property values don't go up 30% a year, you got to be prepared to bear the brunt of that. So just be prepared if you're buying a home of any sort for any sort of purpose. So that's what I've been going through this week. We have we had some flooring renovations done in our home that we live in, and the individual that we had doing it, great guy, did some really good work. Unfortunately, we're discovering now that flooring is not his specialty or his forte in any way, shape, or form. So we are paying for that literally right now. Anyway, it is what it is. You live and learn, I guess. So I want to make that comment though before we get into all the fun numbers. Okay, so let's talk about Bank of Canada. Let's start there because I know it's on everybody's mind. So again, no huge shock. Bank of Canada did not change interest rates. I mean, there was like almost, I think, a 2% chance they might move the rate, and they did not. Again, what I've been saying, the rate is one thing, but you gotta read the comments. Gotta read what they're saying, because that is what's going to start to move markets a little bit. Could also impact fixed rates if the bond market moves. That's where you really need to follow Bank of Canada on their comments. So I want to talk just some very quick summary points that we took away from their comments. And I'm going to kind of mix it in with the monetary report as well. Okay, so I'm going to kind of put two and two together between the monetary report and their comments. So the one thing I will mention, and we had a bit of a shocker last time, Carolyn Rogers, the deputy Bank of Canada governor, I might be wrong on that, but she's kind of second in charge behind Tiffy Boy. So she made a comment about housing, basically saying that housing had to come down, house prices had to come down in order for the market to move and be more affordable. Well, as you know, we've got conflicting things on that because people in Canada are very invested in their homes, and in some cases, they are the retirement plan. I'm not going to go down the route of is that right or wrong? I'm not going there. It is what it is. We have a whole generation that is what it is. So I'm not looking for an argument on that. Just we got to deal with what we've been presented here. So a few comments that have come up, or a few summaries, I guess, from the monetary report and, of course, their comments. So, yes, they did keep the rate where it is because technically they are still within their target rate, right? So I believe it was at 2.4, and they're not looking to really make a huge move yet unless it goes out of the 1 to 3% range. However, they're watching things. Their biggest concern obviously is oil. Okay, so yes, we all know what's going on in the Middle East, and you got to remember people I think are confused on how this whole thing works with oil. This Strait of Hormuz, did I pronounce it right? The Strait of Hormuz is closed. Now that counts for 20% of the world's oil. People are thinking, well, it's only 20%. What's the big deal? Where's the other 80? From what I understand, it's a supply and demand issue. So you take away the world, 20% of oil from the world, right away you've got a supply issue. Demand is still there, if not higher. It's always going to increase. But this is huge. In oil world, this is huge. They're watching this right now where, yes, we definitely had surge in inflation on fuel. That was a big part of it. And of course, there's still average shelter costs that are higher. So these are obviously two main things that impact regular Canadians, will say, the middle class that seems to be just evaporating right now. So those are what they're watching. Now, they're also watching the surge in, I'm just reading off my screen here, my notes, the surge in apartment supply. So there are hundreds of thousands of rental units across the country coming to the market. This is going to create a couple of things, folks. Again, it's a lesson in supply and demand. If you're Canadian and don't understand supply and demand, man, you're missing out because this is telling the whole story. So when we've got this huge glutton of supply and demand is dwindling because immigration is like in the negative right now, well, rent prices should come down. Well, that's going to also impact individuals who are investors. Because again, right or wrong, I'm not here to argue the point. We just have a lot of kind of ma and pa owning rental properties. One, two, that's my wife and I. We own two rental properties, right? We chose, and again, I'm not complaining, we chose this route for our investments as opposed to an index fund or a mutual fund. It's just how we chose to do it. It is what it is. So so there is that concern around the amount of inventory. And I always talk about this where right now the housing starts are through the roof on rentals. Single family, way, way down. Condos, that's a different beast altogether. That's just plummeting for reasons that there's just way too much inventory right now and wrong inventory with those little small kind of shoebox condos. But that's what we're seeing, right? So this is going to be a supply and demand play going forward. Okay, what else did they talk about? So there are the popular Bank of Canada term is headwind. Taking a sip of my coffee here. Sunday morning, my usual time I record my podcast. So yes, I'm like fueling up with coffee. Side note on coffee, I think I've talked about this before, but I'm just doing McDonald's coffee unless it's like a small individual place. Like there's an awesome place in Goderich called Kate's Coffee. Love it. Baden Coffee Company in Baden. Love it. I'm good. Small companies I'm good with. But if I gotta go like big commercial, I just do the McDonald's coffee. 99 cents. Like I'm good. Even at home, I get it from Costco, right? McDonald's coffee. Anyway, coming back. So, what the hell was I talking about? Oh, headwinds. Headwinds on obviously tariffs. So we have to be aware Kuzma, Canada, US, Mexico agreement for free trade is up in July of this year. We got 2 more months of our current agreement, which let's face it, I mean, the president's already poo-pooed that thing for the last year and a half. So who the hell knows what's going to happen now? But this is something where Bank of Canada is noting trade uncertainty, and that's not good. Trade uncertainty, not good, because that's going to impact bloody everything. Everything from housing, automotive. How many times do cars pass our Canadian US border before they're built? 9, 10 times? They got to pay tariffs every time. Or if it's not a great agreement, now what? Now, I will say this. Bank of Canada did their job by talking about what's happening and the headwinds and what they're concerned about. But I will say, listen, I'm a bit of a PC guy. I'm kind of a conservative guy. Okay, conservative party guy. I'm more along those lines. Probably more because of what we just went through on the liberal side with Trudeau for all those years, where arguably so many missteps. And again, I'm not getting into the whole liberal versus PC. It's just more what happened. Forget the party. The reality of it is we amped up immigration to the point where our system broke. We didn't have anywhere to put everybody, and now we're in a recession. I know it's probably not technically a recession, but we're in a damn recession. So I'm more of a progressive conservative guy because I've seen what happened on the Liberal Party side for all those years. And so what I'm seeing right now from Carney, who I believe previously was a conservative, he's the most conservative liberal we've had, I think, maybe ever. What I'm seeing from him, he's unfortunately he still has the kind of the liberal mentality of spend money we don't have, fine. But I'm also liking the other side where we're kind of, and I hate how we say this in politics now, but he's making deals, right? It is a global market. We do have more people to play with. We don't have to play with our former best friend who doesn't like us anymore. We can go out and make new friends. We have friends, right? We have China. Now that Trudeau's out, China, I think, is our friend again. Okay. India, same sort of thing. Like, we can make friends with other countries. We don't need to put all of our efforts in the US. We still have to be friends with the US. Absolutely. Kind of like, has the US kind of become like an ex-spouse, and we still have kids with the ex-spouse, and we have to still be cordial and be friends with them and maybe exchange money like child support or spousal support, but we don't really like them anymore, but they're still in our life because we've had kids together? Is that the Canada-US relationship right now? It might be, which is kind of scary a little bit. But here we are. That's a really good analogy. I'm going to use that. That's it. I'm using that. And when this video gets cut up, it's going on social media. So, I like that about Carney. He's out there making deals with other countries. So, having said all that, if I can come back to what the hell I was talking about, this is what Bank of Canada is watching. What the hell is going to happen with Kuzma? And they're absolutely correct. They're also indicating that we're not really sure what's going to happen. So we're just going to stay pat for now and monitor. Okay. Okay. The other thing that they talked about, and this is a big issue, folks. This is huge. Our population is going through a huge balance act right now. And with that population movement, who has been caught in the crossfire is youth. I got 2 kids, 23 and 25. They're still considered youth. Considering our first-time homebuyer average age is like 40, they're still considered youth, and they are struggling. Huge. So, talking about population, because we have declined in the number of people living here, which, if you really think about it, we have to. There were just too many people here. We didn't have the infrastructure to support. We were busting at the seams. We had no room, and that's what drove the housing market through 21 and 22. So now we're receding because we have almost zero, not zero, but pretty damn close, of net new uh, temporary residents, workers, students. Like, we've shut that tap off. But then we also have people who are either leaving to go back to where they had immigrated from, or we're converting them into permanent residents. And so you now have that happening, and where the youth have now been caught in the crossfire is these are COVID kids. These are COVID kids. They were locked up inside through the last year or two of high school, through their university, college. They're a little bit, through zero fault of their own, they're a little bit stunted because they weren't out networking. They weren't out getting to know people. They tried, some didn't, some tried. They also have a heightened mental challenge, I'll say, from the standpoint that they were locked up, they were isolated, they weren't out there socializing at such a critical part of their life. So us old guys, I'm Gen X, we can criticize all we want. Say, oh, when I was that age, I just tried harder. Yes, okay, fine, fair enough. And I think some of these kids can definitely, get out there and do their thing, but they're coming from a lower point, a bit of a disadvantage than all of us came through. And so when we look at this, we're now on the downside where businesses are doing two things. They are paring back on employment because times are tough right now. Everything's bloody expensive, right? Gas is expensive. Everything's just expensive. So as a business, most businesses are paring back on expenses, which your most expensive expense is employment. It's people. And the other part of that is automation and AI are, boom, top of the priority for a lot of these businesses, because if we can save a ton of money, we don't need people. The business is about business. It's not personal, right? It is bottom line. I can say that the automation and AI processes, they went to a max where everyone was trying everything. And now I think we're leveling out where, like, we kind of know what this is all going to look like, and people have settled into it. So I think to really summarize this, the shifts in population that we're seeing combined with automation and AI are impacting our youth to be able to get half decent jobs. And then you throw into there how damn expensive it is. And our kids, our youth, man, they're at a disadvantage. And that is something that Bank of Canada talked about in particular in their monetary report as well. When we're talking about interest rates, so next topic on monetary report, talking about interest rates. So they are expecting higher for longer on the rates. Now, technically higher for longer is probably around that 4%-ish range. And that's just what they're expecting, but they're going to okay. They're also expecting, trying to read into this a little bit. They're also expecting that by mid 2027, 2028 is kind of when we're going to see some stability. And that makes sense. If you think everything went up, everything came back down. And I will say this, I've posted this, we have pent up demand. I'm just telling you, it's there. A lot of people who can afford a home are not moving because they're happy where they are. They're not sure about their life. There is pent up demand. I posted about number of home sales per 1,000 people. It's super low right now. We all know where the housing numbers are. And that always follows with a huge spike in activity. Always happens. So just wait and see what happens there. Okay. So that's Bank of Canada and economic report. Now, I want to hop over to just a few stats to be aware of in what's happening. So inflation, right, is, like I said, stable. So right around the 2.4%. We'll see what happens for April. Keep in mind the next Bank of Canada meeting is in June. Okay, so there's no meeting in May. Okay, let me go through some stats here, folks. Okay. What did I want to talk about? Okay, rents. Holy crap. If you're a real estate investor, for the love of God, know your market before you invest in it. Rents are down everywhere pretty much. There's a couple of pockets that aren't, but rents are pretty much down everywhere. Okay, so rent, yeah. So year over year change. The only place that they're up is actually Atlantic. It's the Atlantic provinces. That's good news for me. My wife and I, we invest down there, so I'm good. Everywhere else, though, year over year, it's down. Ontario, like almost 5%, BC over 5%. And let's just talk about those two. Those two areas arguably have the high, not arguably, they have the highest reduction in population, right? So way down in BC and Ontario. Alberta's down. Alberta's kind of hit their peak and now they're coming back down to earth. They're about a year or two behind us. Quebec is down, and then the metropolises of Saskatchewan and Manitoba are also down. So asking rents in Atlantic are up. That's a good thing for me and my wife. So yeah, so that's that part. Yeah, like I said, supply and demand is also really interesting. So Ontario, obviously, just a big hot mess, right? There's just more supply coming to the market. There's still demand, but just the supply is just way down. Okay, continuing on. What else did I want to talk about here? Give me one sec. Okay, so I want to get a little more granular on housing and their starts and construction. So I think I mentioned it earlier, but I'm just going to touch on it again. Rental under construction. I'm not talking starts. I'm talking under construction. Very big difference. Okay, very big difference. In Canada, under construction as we speak, rental inventory is over 200,000. It is humongous. There is a ton of inventory in rentals coming. Condos are negative or are dropping. Thank God we got too many of them anyway. And single family continues to drop. Okay. So I said it before, but just to summarize, single family, boy, let me tell you, a lot less under construction. The HST thing, if anybody knows anyone who understands how the damn HST rebate's going to work in Ontario for the next year on new homes, let me know. Can someone just DM me and let me know? Okay. Because I talked to accountants and they're still trying to figure this out. We don't even know if it's even passed. I think it's passed. Some people think it hasn't passed. I really don't know. Anyway. Okay, so that's dwellings under construction. Okay. One sec. So single family building permits, that's another thing to talk about. So single family building permits are way down. That is a huge forward leading indicator. With single family building permits, you get a permit, then you go under construction, then you start. That's the sequence of those three stats. Building permit, under construction, starts. Starts means they come to market. So single family building permits in Ontario in particular is just dropping. And right now, what you're going to see on a lot of these builder sites, which again is why the HST came to life. this HST rebate on new homes in Ontario only for the next year is because there is a record number, and I mean a record number of even just completed and unsold inventory on builder lots. Nobody's buying. So I've said this before where if the builders aren't building, that means there's no inventory coming. Remember, I said about single family homes in particular, that's what Canadians really want generally. We're not really a condo culture just yet. Toronto, BC, fine, but not really by and large. Well, here's the thing. If you're not building homes, you're not getting any taxes. You're not getting land transfer tax. You're not getting, the builders are not hiring people. The builders are not buying stuff. It's a brutal chain reaction. So that's why they're trying to spur this, right? Go build. We're going to give you no HST. You don't even have to be a first-time home buyer. Want to buy a new home? Knock yourself out. So having said that, though, if you know of anyone who actually understands how the HST is working, hit me up. Let's talk about mortgage rates. Everybody loves talking about mortgage rates. Let's talk about it. Okay, so what's happening with mortgage rates right now, you got your variable side, and variable rate now is popular maybe for the wrong reasons. So the only real rate that we're seeing right now that starts with a 3 is generally on the variable side, but it's a variable in a volatile market. So if the only thing you want is a best rate and you have zero forward looking need, we'll say, variable's fantastic. Knock yourself out. Might not be 3% much longer, but hey, you got a good rate that starts with a 3. So we're seeing people like myself who actually provide advice to clients that are ramming a rate down their throat are saying, hey, variable's all fun and games as long as you match the type of client that needs a variable. Flexibility, only 3 months interest to break the mortgage for the most part, depending on the lender. And of course, you're okay with the volatility of up and down. So we're seeing a bit of a rise in the 3-year fix. Banks right now are hot for 3-year. They're hot for it. So that's where we're seeing the most discounts. So a lot more of a rise in the 3-year fixed. And the one thing that we're still seeing, especially on my end, is the 5-year fixed is still popular. It's a little bit higher than the 3, but people are buying that security. If I don't have to worry about rates going forward and I've got a good rate on the 5, hey, let's take it, right? People are not into taking a whole lot of risk right now on the rate, especially if you're a first-time home buyer buying 5% down and you've scraped together your down payment. Why are we rolling the dice on a variable or a 3-year fixed even? 3-year fixed is not unreasonable, but if you've got jobs with great income that are stable, what else do you need, right? Okay. Let's talk about mortgage delinquency a little bit. Ooh, mortgage delinquency, interesting stuff. So, yes, it is rising. So the percentage is rising a little bit. And I think with mortgage delinquency in Canada, we have to look at trends. So the number of delinquencies, okay, on a 3-month change is about 1,200 across the country. 10 is too many. Okay. I mean, obviously, we don't want people are impacted huge when they lose their home, but we do have an increase. It's happening, right? But we're still, in my opinion, we're still in a monitor situation because let's talk about it, folks. Really, if you bought a home in 2021, 2022 with 5% down, you're in the negative or minimum down. You're underwater on your house. We all know that. We all know that. So as long as you haven't had other changes like employment, etc., you can still probably afford it. You just got to kind of grin and bear it until the value comes back up. You're kind of stuck in that home. And I think if I can come back to the 5-year fixed rate comment, we also see a lot of first-time homebuyers staying in their house longer. So the 5-year fix becomes a very good viable option for them because they're going to be there for 5-10 years anyway. They're just not going to move that quick. Back in 2020, 2021, 2022, 2020, I really between 2017 and say 2022, people were moving a lot because your house went up 30%. You don't have to update your home, just sell and buy another one. You're making so much damn money. You're not doing that anymore. So that a big, big, big change in overall, view, the way people are looking at things. Okay, I think that's it for now. I'm gonna stop there. That was a lot to take in because again, we had a great rental report come out that we talked about. Bank of Canada did their song and dance and their monetary report, talked about interest rates. I think that's about it. We'll stop there. There's probably more to talk about, but I got another episode on to do in this in 2 weeks, so we'll save it for then. Any updates that come up, we'll talk about it then. Okay. One little kind of shameless plug. If you got a mortgage coming up for renewal, okay, this is let me talk about this actually before we sign off. I'm finding right now from major banks, they're just lobbing rates at people, which is fantastic for the consumer. It's amazing, right? Save money on your mortgage, knock yourself out. But what I really find is it's like switched a little bit where some banks who have spent and I worked before I became a broker, I worked in banking for 25 years with major banks. My last role with a bank was as a mortgage specialist. So I did mortgages for almost 13 years at a major bank. It was never about the rate. It was about the advice. It was about the service, right? It's flipped a little bit. Banks are just lobbing rates at people, hoping for the best. But it's not sometimes it's not even the right rate sometimes. It's not the right rate, it's not the right advice, and they're almost reversing a little bit where it's like, here's a rate and you'll never hear from them ever again. We're not talking about penalties, we're not talking about prepayments. We're just price, which is great for the consumer, save some money. But the number of people I see that are looking at these rates and taking zero advice, and I can tell you right now, it's not the right option, and they don't want the proper planning and advice, and like it's mind-boggling. So I'm gonna see some of these people later on and be like, "Oh, we have this problem, this," I'm like, and I'm gonna say, "I told you so." Like, what do you want from me here? So anyway, if you have a mortgage renewal coming up, my comment to you is this: talk to me. If that option is better, hey, have at her. I'll let you know. Knock yourself out. Okay. But if I can do a plan for you, and the good, not all brokers do this. The good mortgage brokers do this. What is your plan? How are we going to get your mortgage free faster? How are we going to get you to your final goal? How are we going to manage the possible upcoming move and kids? I had one client where I think the bank's going to do the mortgage. It's not good. They shouldn't do the mortgage. They shouldn't. This client's going to be put in a bad situation. They just are. It is what it is, right? They're taking wrong options anyway. Just make sure you get the right advice. I don't know where I was going with that point, but talk to me. Shameless plug. I'll tell you if it's good or not. I'll tell you what the options are. Okay. But just be careful with what the banks are doing right now. They are lobbing shit at people and quite frankly, hoping it sticks. Sorry, that's what's happening. All right. Oh, that feels better saying that out loud. Questions, let me know. Love me. What is it? Love me, follow me, desire me. 5-star review would be amazing. Thank you very much. And we'll talk to you soon.